time. Tiger Brands is next, one of the largest manufacturers and marketers of consumer products. Food, about 50% basic commodities like mealie meal, and then the other half is branded consumer goods like Oros and mayonnaise and all that kind of stuff. 77.8 billion rands worth of market cap, price earnings ratio 18.5, dividend yield of 2.67. But the reason we're talking about them is they went heavily into Nigeria and East Africa and then got an absolute hiding and then have cut and run.
Yeah, I think, if they went, they saw, but they didn't conquer. And the big news was obviously the whole Nigerian Dangote flour mills that they went into. They had some exposure in Nigeria, but Dangote was going to be the deal that really catapulted them into the whole
and again, happened in an environment where it looked like a no-brainer. Why wouldn't you want to be involved in a thriving, bustling economy with consumer goods? So go in and buy a business, professionalize it perhaps, go big. Unfortunately, what they discovered when they got there was all sorts of accounting irregularities, all sorts of funny relationships with third-party customers and suppliers, and then they, encountered severe difficulty with some of their executives being kidnapped, all sorts of dramas.
Yeah, they paid close to 1.6 billion to get a controlling shareholding in the business, and ended up 3 years later having written the whole amount off and sold it back to Dangote, in fact, for like R1 or something like that. So the concern there was, I think the timing was a bit off, because when they went in, soft commodity prices were actually going up, and it's Tiger Brands' business really to know that. So you would have expected them to have some sort of strategy for that, which it transpired that they didn't. And as you mentioned, they had problems with recovering from debtors because it was an oversupplied market, and the debtors that had owed Dangote money had a close relationship with Aiko Dangote himself, so he was able to collect that money from them. But Tiger Brands, being this big South African corporate, just couldn't.
And that is a concern, because Aliko Dangote controls a big conglomerate with all sorts of relationships between the various players. But I think it's a good lesson, because people now will look much more carefully. CEO Peter McClary lost his job, one would argue, over this. The new guy, Lawrence McDougall, looks like he's taken the business back to its knitting. So they're exiting the East African businesses as well, in the Ethiopian business, so they're retaining the core bits that they like. Share price chart, though, reflects that things look a lot better. The market likes this. It's back to its all-time highs. So I don't know. I suppose that means that we now have a different vision, and it all comes down to whether or not the consumer economy in Southern Africa can recover. Can it or not?
I think in time, but for me, amongst the food producers, I wouldn't go with Tiger Brands, only because the exposure is too much to the bread and milling business.
Oh, interesting. So you would prefer something that's a bit more focused on luxury goods or the higher end consumer good area, like AVI perhaps?
AVI is one that I would definitely look at, even at these levels. Much more diverse business, run for shareholders.
Okay, good. So you're going to go not hot on Tiger Brands?
Not hot on Tiger Brands.
I got to feel like the brand strength gives them enough momentum to keep going. So I'm going to go stay hot on Tiger.